Okay, let's start now. Am I right? Are you okay, ready to start? All right, thanks, Alan. Thanks a lot. Okay, here we go. That's what. Now, why should you care at all? That's right. Why should you care? Are we seeing the repeat of 2008 global financial crisis? A lot of people go through this cycle. Now, 2008 to now, how long was that? That's almost 11 years. Now, if you have a child that was born in 2008, he will be 11 years old. I have a daughter actually, and she's 13 this year. And during that time, 2007, 2008, it was very difficult time. I can tell you that there were jobs that were employed. I'm going to talk about those and how will it impact you should it repeat itself. Now the 10-year cycle is already here. Many people said, look, Martin, this 10-year cycle, is it going to be happening again? Right. So what should we do about it? Right. Now, some people say, look, the stock market cycle is only 4 or 5 years. Now we've seen this 10-year cycle. Well, maybe it's not going to happen because Donald Trump is doing something different, right? But we do know Donald Trump a little bit of a devil in what he says. And last night was definitely the devil at work. So in this picture, you can see, can we have a black umbrella, very similar to one we see in Hong Kong, to protect us from this financial crisis? So these 5 clues I will share with you will be very important. So make sure you take picture of this because it will definitely help you a lot in this one. All right, let's move on to what we said. Now, last night, there we were, okay, Donald Trump tweeted 623 points. Now, why is this? Because the Jerome Powell, which is the US FOMC, he's sort of smooth the market. He suited the market. Look, like it or not, interest rate, we will try to manage it. But Donald Trump said, no. You have to follow my order. I'm the boss. I am the chosen one. Remember, Donald Trump said, I am the chosen one. So he's the chosen one. Is he the one who's going to destroy the financial market, destroy your career, my career, and everybody else? He is a madman. So the way it is played out, presidency will probably say, look, this guy is a madman. I will hurt him when he's least expected. And guess what? So Donald Trump, remember, he was supposed to raise the 10% tariff about 2 weeks ago. He held back. And why did he hold back? This is because there is a Christmas period. Now, this is August time frame going into December. A lot of American retailers will start buying. So, and also remember, September to November, it is the harvest season. Okay, the harvest season where a lot of corns, a lot of the farm product, right, will be coming in. Now, remember, I said this also on NTV7, all right, where the U.S. is the main exporter of farm product, daily product to China. So when China stopped buying, and finally presidency did last night, he said, look, we are going to slap 75 US dollar billions into US product, and that's going to hurt the farmer because the farmer are one of the biggest supporter of Donald Trump. So this is where he's going to get hurt. Now Donald Trump will be scratching his head, and there is a G7 meeting at the Paris. So what is he going to do about it? So this is going to be very, very interesting going in there. So Donald Trump is in a tight spot. Presidency is really hurting him when right now, the holiday season, Americans are buying more things and they will feel the pinch, right? Why? Because soya bean is not going to be purchased by the Chinese. They are piling up in silos out there. Currently, all the soya beans are being subsidized by the US governments. So as such that it's been subsidized by the US governments and they are still surviving in there. But eventually they have to do something. They got to get rid of that soya bean before the next harvest season come in. So going forward, this will have a repercussion to the market. So I'm going to explain to you why it is so. Now let's look at it. We have an educational tip in our Telegram group. So make sure you join us now for those of you who don't so, and do spread this word around. How many of you are going to be so spread this word around, because in our education, we not only focus on stock tips, we also focus on many other things like interesting topics, engaging topics. Any of you members who want me to talk about, we have a research team in there, and we are very happy to really give you very engaging material so you would learn and you will benefit, because I have seen people got poor of bad decision. Now, Chef Saham, those of you who know, one of my TradeVSA brand ambassador, he got one of his client, and this is very tragic. He actually explained that on the YouTube. You can watch that YouTube in my YouTube TradeVSA. Make sure you catch that. He has this gentleman who got retrenched. all right, from a company, from a multinational company, and he got a very good package. And because he was not educated, he lost $500,000 in the last 6 to 9 months in that downfall of the stock market. It's really tragic. $500,000, ladies and gentlemen. You can do a lot of money with $500,000. So don't do that. Don't be like this guy. Learn like what I did. And since then, I prosper. And I want you to prosper too with the educational tips that I have in my website as well on my Telegram support. So make sure you join our group in there. All right, let's move on. Okay, now let's go back a bit of time. We were now in 2019. We're going to move back 10 years ago in January 2000. Of course, we do know the global financial crisis did not happen on 2009. Okay, it happened much earlier, which we'll trace. We'll do a bit of history. Is that okay? I'll do a bit of history. All right. So also I'd like to know my pace. Is my pace coming in okay? The pace. How's the pace coming in okay? My pace coming in okay, right? So you can see this is a younger self of Najib in here. And sorry, you can't see that one. I do apologize for that one. 2009, just make note of that one. The notes will be 2009, January 2009. And Malaysia was in a recession. He came out and he declared Malaysia was in a recession and the outlook doesn't look good. Malaysia export fell 20% in the first quarter. Okay, first quarter compared to the same 3 months 2008, although the rate of decline appeared to be moderating, but export also fell in March compared to 28%. It felt less. So he said that Malaysia is in recession and likely to continue more on the negative side. So do we want to see that in coming January 2020? What would you say? Of course not. You and me will be out of work, isn't it? Right? And that's not good. So we must do things to protect ourselves. One of the first things is to do is to get educated. Ladies and gentlemen, education is important. And ignorance, it's going to pay you. Just like that person we talk about who got retrenched, who got $500,000 of a package, you know, as a VSS, and he lose it on the stock market. Very silly, very insane, I can say. All right. So let's look at it. Now, this is going to impact because when he announced that 2009, many families were affected. Jobs are becoming insecure. Many people lose their hard-earned savings. You know, they wanted to go for a holiday, especially how many of you have housing loans? Now think of it. Many of you I do know I've spoke to have a few loans and a few housing loans because why? They use property as an investment. So you may have 2 or 3 what we call apartment rental yield, and you all know prices are not going up. They're having difficulty to really sell it out, having difficulty renting it out. I know I have some apartment too. I have difficulty renting out. It has been vacant for like 6 to 9 months. Please pity me too. I also don't have people renting my apartment too or my condo. So I think it's also going to affect you too. And guess what? When the recession, if that recession do come 2020, right? What's going to happen? No rental. When no rental, a bank's going to come down on you. But hopefully that's not going to happen. Let's look at the clue which I will share with you. So there's a lot of financial insecurity, a lot of uncertain jobs. Am I correct? Okay. So let's move on. What we're going to talk about next. So definitely in 2007 and 2008, what happened? Okay, first of all, let's look at a little bit of, now of course we have to get a bit of technical because, you know, like it or not, the economics, the share markets, many of these got to do with the sense of the growth of the company. The growth of the company, in this case we are referring to Malaysia. So we got the global growth. You can see right in 2007, you know, just like what we've seen, it's been growing. And then 2008, wham, the market just plummet like that, right? So are we seeing that now? Let's go through step by step. Okay. Then we have also the marginal GDP in first 4 quarter, the fourth quarter of 2008, and also plummeted, the GDP plummeted over there. And look at the production indicator, all the factories. Now, if the factories slow down, right? And I think some of you who are working in the factories, small, medium businesses, I've been talking to a few, even the Nasi Lemak stores person I talked to, he said, Martin, business really slowed down. What can I do? You know, so a lot of people are turning to e-commerce. Is e-commerce the answer? Share with me, and if you have a chance, just PM me. So I would like to hear some of your issues and also able to understand you. So production indication is also down. You can see in here as a result retrenchment becomes an increase. So you got like 5,000, 6,000, 7,000 people untrenched. Now, do you know in Malaysia, there are close to about 80 to 100,000 fresh graduate coming out workforce every year? That's right. These are the youth around 20, 21, 23 coming out seeking for jobs. So what does that mean? That means our current government, Pakatan Harapan, has to generate at least 80 to 100,000 new jobs every year to accommodate all this new fresh graduate coming out. Now, if we have a retrenchment, that's going to blow up. You got the fresh graduate, then you got this heavy retrenchment in there, and I just don't want to think about it. It's blow my mind. Really, it will blow my mind, and that's going to be very, very unfortunate. So you must do whatever you can to protect yourself. Now let's look at what's happened. Now let's go back to 2007 and 2008. What really happened there? Okay, so imagine bank lend money to you with the below criteria. Is it true or false? Right? When you lend money, okay, or what you lend money for, you basically don't need to prove of income. Now, I remember once in 2007 when the banks lent you money, you don't even need to have, now this is 2007, not 2019 now. They lend you money if you don't even have a fixed address. Can you imagine a PO box? If you have a PO box, you can actually borrow money. And that's happening was in US. So also, because the money was coming in, there's no down payment needed. That's right. No down payment was needed to purchase houses, and basically it was free money. Okay, so 2007 there was a big boom. Money was coming out, bank was lending, not only one loan, 1, 2, 3, maybe up to 4 to 5 loans to a single individual who don't even have a permanent address, no proof of income, because property prices was going up. Everyone was buying property prices. That was in Chicago, the Midwest. But today, 2009, after 10 years, this is quite different. That lending of money to everyone was why the financial institution those days were greedy. It's all bottled down to greed. Do you agree with me or not? If you do agree, share with me up there. Put a thumbs up in here. So that's what's actually happened in India. So the banks were really lending out there. So let's go on. So let's look at the global financial crisis. Let's trace back in 2008. First of all, there's a lot of free money happening in there. As a result of the free money, houses has been built, small one, big one, swimming pool in Florida, you see that a lot. And then it also triggered back to 2012. Those houses been sold. Now, what I do know right now, a lot of these houses, from my friend who is living in Florida, they are left to rot. That's right, they're left to rot. Semua sudah rosak. Rapot hancur, because almost 10 years in the beach, what salty water can do. Especially one of my friends told me, Marty, if you have an apartment in Penang next to the seaside or next to the beach, do you know what it does to your whole house? The rust, the furniture, the saltiness, totally decimated. After 2 years, because the slowdown that it has, everything in the house, the furniture, all have to change. So you have to rent it out. It cannot rent. What happened? And that's what really happening to you and me, brother. Those of you who have property, you can sympathize with me. I know, because some of these are my friends and they are my client, and that's very little we can do. So at that time, same thing. Houses being built. So a lot of banks demand more mortgages. All right. So that's the first thing that happens. So free money coming, houses being built, and banks really want more. And what they do with these mortgages, they make it into an investment. That's why they call it the CDO, cash CDO. I can't remember the cash debt obligation. So they make it into what we call a subprime. I think many of you still remember the subprime loan. So they were very high interest rate because you can borrow and then they sell it off to investor, right, for much higher interest rate. And a lot of investors were looking for good use. At that time, money was free. Interest affordable to subprime borrowers. So that creates a lot of people borrowing. And at the same time, the financial institution, right, many of them, you may have heard of them, the Lehman Brothers, right? They were, even banks like Morgan Stanley, everyone, even to the Singapore banks, the Malaysian banks was not caught in it, luckily for us, but the Singapore bank that were exposed to the whole financial center were caught at that time. So, and then banks were allowed, investment banks, not so much the normal banks. They were allowed to do what we call hedge fund trading, and as a result, they can long and short. So when the market did turn down, right, a lot of hedge fund turned short, and that caused that situation to worsen, right? Worsen. And that recently they introduced, in 2012, they introduced a Woke rule. A Woke rule, which tells you that, look, basically you need to have a Chinese, what we call a Chinese wall. The trading desk and the what they call the investment desk, they cannot talk to each other, one, and they cannot engage in the same kind of activity. So right now, I heard 2 days ago or 2 weeks ago, they want to revoke the Woke rule, okay, because banks are not doing well. So they want to take the bank's money, okay, which is you and me, not in Malaysian context. Malaysian banks are still okay. The US one, they want to take those money that people put in deposit and trade them as part of the earnings, because banks, like it or not, lack of a better word, they are greedy, the US banks, so they have to make money. So part of this is also the cycle that you have, because a lot of shareholders want banks to do well. Okay, now that's part of it. But hopefully we don't see the Woke law being revoked, and then you will see the financial center will be hating this. But there are signs right now. Okay, so what does it mean? So after 2008, the poor were getting poorer, and that's what's happening in here. The poor were getting poorer, and this is very bad. If you look at the Malaysian Department of Statistics, after 2008, let me get the laser pointer here to share with you. You can see after 2008, right, many of you know the market fell, yes, but the precaution of 2008, the housing prices just sort of move up. And there was a talk yesterday on BFM radio station. I think some of you may have learned. Today, the new millennium cannot afford to buy a house in Kuala Lumpur. Maybe Rawang, maybe Bukit Berotong, Tanam, Sentosa, Serambantu. Yes, you cannot get landed property. But in the KL, Klang Valley area, to get landed property, freehold, it's almost above 900,000, because the prices people are still maintaining. I have a friend of mine who's living in SS2, very old houses, I think more than 45 years. I mean, if you buy the house, you probably have to do a lot of renovation, and he's trying to sell it for 1 million ringgit, a double-story houses. So if you want to live somewhere nearby, 1 million, would you pay for it? For terrace houses. So as a result of that, money got smaller, all right? And I'm going to talk about the 2008 all the way to 2017. So next, this is what happened here. Let me just turn that off. Okay, the houses prices go up, and as a result, going forward, the money become less, right? The value of money drop, and this is very recent. 3 out of 4 Malaysians struggle to raise 1,000 ringgit in the event of emergency, and 32% of the population could not even have 1 week of expenses. Right, the statistic is very, very alarming, and that's what the financial literacy and awareness is important. So part of, in line with the same theme, the job of a TradeVSA here is to educate, the unskilled. I would call them unskilled. To me, I always think about the poverty is more of the knowledge. If they have the right knowledge, and many of you who are listening today, okay, may be unskilled right now, but if you follow me around, follow our website, I can tell you very soon the information that you have will definitely help you a lot. So at that time, only 22% of the EPF contribution was enough. 22% people have enough sufficient only. I would say almost 80% of the people don't have enough money. Okay, maybe some of you may argue with me, they are like char kway teow seller, they are nasi lemak lady seller, so they have a lot of money, but they must invest it wisely. Now, you all know recently, the last few years, the JJPTR, the Ponzi money scheme, yes, there are some people make it, some people poor, but I do see a lot of people being poor, and the situation is not getting better. Okay, now what causes, now this is an exercise that I have for you in here. What causes the price of nasi lemak up? Okay, now in 2008 it was 50 cents, 2019 was 2 ringgit, and 2029 would it be 5 ringgit? for the small packet of nasi lemak that you eat every morning? Anybody can tell me that. Okay? Who can tell me that? What causes the price of nasi lemak to go up? All right. I'm sure some of you would have the right answer. All right. The answer is no other than inflation. That's right. The value of money that was caused by 2008, right, has caused money to go down sufficiently. Before 2008, the inflation was stable, but ever since that, the value of money has dropped. You need more money to buy the same amount of value. That's right. And we did talk about previous talks. I'll talk about gold and REITs investment, something you want to look at. So these are the things you want to do. So before the global financial crisis and the fall of Lehman Brothers, let's do a bit of history too. It's important to know, because if you have a history, now like it or not, stock market people like us, we are historian. We are historian of the stocks. So we know what economic event happens, and it's important. You can trace back, you can avoid the mistakes that most people make, the loophole, the dark hole, all right? So firstly, in 1973, there was an oil crisis followed by the Bretton Woods Agreement. I'm not going to go into detail. Basically, Bretton Woods Agreement just says that we took gold off the currency. It became a fiat currency, which means the money is actually worthless. It's backed by whatever the government said. Before the 1973, everything is backed by gold. And because of once you took the gold off the standard, then you got the oil crisis came in 1973. And then later on that pushed up to 1987 due to financial speculation. We all remember that in 97, the financial crisis. I think some of you may be born only in the year, I would say year 2000, 1987, you probably know at that time, your mom and dad or your grandfather will share with you. Then the 98 collapse, the LTCM, the king of the hedge fund, right? 1999, 2000, the internet bubble. 2001, the terrorist attack. That's the one. The fall of the Twin Tower in New York, and everything's changed. The 9/11. And then you got to 2008, which is today's focus. The subprime crisis, the global financial crisis, which led to the fall of the Lehman Brothers. And 2019, as a result, 2019 to 2014, the US Central did what it did. They print a lot of money. All right, the US Central did a lot and call it quantitative easing. I think, do you still remember that phase? Quantitative easing, 2014, they were still doing that until Obama's time. Then they stopped because economy picked up. Right, they recovered. So that was what we're heading for. Now let's look at the US dollar to ringgit. I think that's very important from a context from a Malaysian in here. We were when we're at the, let me just bring up my laser pointer here. So at the point in 2008, the beginning 2008, the currency we were around 3. It went up to 3.6. And then this is where, the financial crisis happened. Our market actually moved from 3.2 to 3.8, right? And then onwards, we strengthened because, after 2009, the market recovered. So the ringgit also strengthened. That leads on to, and this is a part where Malaysia got strengthening, until 2015. You all remember what happened. We spent a lot of infrastructures in here, and there was, okay, let me just change this again. So at that time, the next slide. So you can see from the peak of ringgit, 3 ringgit to $1, we went up to 4.5. And this is where we see there was some market correction in here. We did well, we went back to 3.8. 3.8 was the best. And right now we're at 4.2. So our ringgit has lost 1/3 of it. That's right, from where it once best. And some people told me who are very optimistic, they said that our ringgit can go past back to 3.8. Right now, you do know there's a currency war going on. What does that mean? That means everyone, like it or not, right, every country would like to have their currency as cheap as possible. So that way, the export is better. Everyone is trying to, outwit each other in here. Now, my real concern is, what do you think? Will our ringgit break above the 4.2 to 4.4? If it breaks to 4.4, ouch, you're going to feel going out for a holiday, it's going to cost you a lot of money. Or we're going to go down 3.8. Let me know, text it in there. Wait, what do you think? It's going to go past 4.2. This is where we are, the 4.2 and the 4. Because every ringgit that we lose, it's going to cost you money. Am I right? Okay, so think about that. So next, we're going to look at the KLCI index. If you look back where we are, the market went down to 860 points. And then I still remember while I was a broker at that time in CIMB, the market cracked through be above the 1,000. This is where we saw the market was recovering. Okay, the market recovered as it did. The central bank came in and started printed money, and the market just zoomed straight up in here. So next slide I will share with you is the oil prices. Okay, let me show you. Yeah, this is the one. I'll come back to that one later. So you can see the market actually dropped 40%. Now remember, this 40%, that was how bad financial crisis did. It went down by 40%. That's right. So if you see where we are, the KLCI in comparison to 2008, when the old Barisan Nasional were the government, we were at 1894. It only dropped 16 points. That's right, 16 points. And we are already feeling the pinch. Right now, we are at this support in here, 1589. That's what we are saying. Look, if the market were to break through 1600 and pursue lower, right? We're going to look at the clues later on, okay? Just give me a few more minutes. We're going to look at the clues. So this is where the market dropped down by 40%. Are we going to see that another 20% drop? That's the question mark here. How far are we going to drop back? Now let's look at the crude oil, really, because these things you need to know in context, because when we look at the framework, the 5 clues that I will share with you, that will tell you whether we are going in financial crisis or not. It's yet to be seen. So you can see that 2008, one of the factors that causes the market was the oil prices. This is the crude oil prices. Now remember back in 2008, at that time, petrol prices went up to 147 and the US dollar. At that time, Malaysia was still exporting, so people felt, we shouldn't pay so much for the crude oil. And then I still remember Goldman Sachs that it will break through high of 147, it will go to 200. And then immediately the market came back down all the way down to $40. Just in 6-month time frame in 2009 because of the financial crisis in here. So leading to it, we have to have a oil price. Okay, this is the oil price. Now this is the oil price today in here. So we have to look at the context 2008 and 2019. Okay, so 2019, do we see oil prices going higher? It tried to touch the 80 US dollar. But right now we are down to below the $60 and the $50. So this is important to know in terms of the context. Okay. All right. Let's move on to some of the information that we have. Right. So let's go on straight now to the 5 clues that you must know offhand, and 1 bonus. I'll share with you 5 plus 1. That's right. Now you can take a photo of this. I'll give you 6 clues you must know to protect yourself. 3 fundamentals and 3 technicals. Okay, 3 fundamentals and 3 technicals. Number 1, inverted yield curve. Okay, YC. Number 2, global financial confidence are falling. And number 3, rising commodity prices and falling US dollar. Okay, falling US dollar. Now these has to contribute to it. Okay. So on the technical side will be fail rally with low volume, double-digit correction, and ugly-looking charts. All right, what do they mean? I will go through them one by one. Now these are what we so-called the 6 clues that you must have. There are more, of course, but I want to sum it up to someone layman like yourself and me will understand without too much technicality. So when you open up the newspaper or when you go to your coffee shop and talk about you, these are the 6 clues you must know to protect yourself. All right, let's go through one by one. All right. Now, first of all, okay, let's go. Now, clue number 1, fundamental. Now, the inverted yield curve. The inverted yield curve basically just talk about interest rate, the short-term interest rate and the 10-year interest rate. Now, if you don't know what I'm talking about, if you ever go into a bank, walk into a Maybank, a CIMB bank, you will see on the board there, they have the 1-month interest rate and they have the 5-year interest rate. Normally more than 5 years, they don't really do it, So the 5-year and the 3-month. But in US, they have the 10-year and the 3-year what we call interest. Now, if you look in it, the inverted yield curve turned in December 2008. Okay, so the blue one that you see is the 10-year, the long term, and the black one that you see is the short term. Now, what it simply says is like this: if a person who is pessimistic, they are not very sure about the future, which can be a 10-year time frame. So meaning they're not willing to put their money into the bank. So if you're not willing to put the money in the bank, their outlook are very, very pessimist. So in such, they're pessimistic, they're not putting in money in the bank. So because the interest rate is lower, and that's all about it, because they don't have a good outlook in 10 years time. So because of that, interest rate drop. So it also said at the same time, they only want to take that money, put it on a short-term rate, which is like a 3-month and a 1 month, because they felt that a month, what we call a bird in the hand theory, means I'd rather have my money closer to me in a shorter time frame than a longer time frame. Hey, 10 years, no. Nobody even know what will happen in 10 years. All right, so that's what they're saying. Short-term rate, you get more interest. That's what you put in month by month. You roll every month, 1 month, 3 months, you keep rolling it, and you get the money now. 10 years, you put it one time, and you're just going to sit there. So what's that? So it's a situation where short-term interest rates are higher than the long-term interest rate. So that's a good prediction of recession, and that has been. Now, why? Because it has been very consistently out of the most. When I say most, here we are talking about 70% right. The recession will come, ladies and gentlemen. There's no doubt about it. There will be a recession coming in within the next 5 years. The question is, how bad is it? Right? We're going to look through that afterwards here. So similar condition will prevail in the rich developing countries, and even after the 2000 global financial crisis, it still has. So the inverted yield curve is your first clue fundamentally. It has inverted, ladies and gentlemen. So whenever you see this again, don't. But take note of it. All right. This is the next point. Is recession usually come after 18 to 27 months after the first inverted, which is December. So 27 months, which is 2 years. You're talking about 2 years, 2021. Okay, 2021, 2020. So a lot of people will talk about 2020. Now my take, I think I'll talk about this also on the newspaper, NTV7 also. I did talk about possibility there may be a slight delay because of Donald Trump trying to manipulate the stock market, or what we call the monetary policy, to his favor if he get appointed as the second term. Right? There's a lot of political elements that you guys may know, but perhaps I'll do another talk on that one. So let's move on. Now the second fundamental clue is Trump. All right, this is the picture of Trump, and we did talk about him this early on, and he says that, look, the global consumer confidence is on the decline. One of the clues is that consumer confidence on the decline, and we did say that NPCSI, which is the primary consumer sentiment index, is down. And one of these are causing it is the US-China trade war is the cause. And the latest one I just heard last night is also happening now is the Hong Kong peaceful protest, or you call it the Hong Kong riots, and that's causing it because they are planning to delay. Remember, the school holiday is already over, so they're gonna going back to school. So I expect that to end, sometime in a week's time. But they say the first 2 weeks of September they will boycott. They will not go to uni to study. They will continue to boycott until the authorities meet 5 of the demands from the students group. Okay, so these are the protesters. So these are their second 2 clues that is there. So next one. Now the third clue, which is fundamental, which I talk about here. Let's go back. All right. Sorry. Oh, I gotta go back. Here is the commodity price. Now remember, commodity prices I shared with you just now. Right now, we need to have rising commodity prices. The last few recessions always have oil price going up, but we have seen early on one of the charts. I remember I shared with you, right? We are around the 60 only. It tried to hit 80, but tak boleh. But one of the reasons why is because there is a lot more output in by the Saudis, and the price currently is spiking is because due to the Iranian supply and also the geotension that you're seeing here. So it's still stabilizing at $60. So that's clue enough. But also remember, there are a lot more cars running on batteries, especially in China. Those of you who've been to Beijing, one of my friends who came back, the amount of pollution that they have in Beijing is really bad, and especially in the summer, you could hardly see. There's just too many cars in Beijing. So that's why the governments are turning into electric cars to stop some of these pollution in there. And it's working, I think. In the short run, they have to. There's no choice going forward, because why? The pollution will cause a rise in healthcare expenses in there. Okay? Let's look at the next one. So we have done the three very simple, what we call inverted yield curve and consumer confidence falling, commodity rising prices, and falling US dollar. Now the falling US dollar in here, the US dollar has to fall. Right now, US dollar is consistently strong, and even Donald Trump tweeted, they want to have a weaker US dollar, but you can't, because, remember Donald Trump accused China, accused Malaysia, plus a few more countries are being currency manipulator, because he also wants a weaker US dollar. All right, US dollar is maintaining strong, so because of the very strong US economy. All right, so those are the three clues. In short, we talk about the inverted yield curve, the global consumer confidence level, and falling. So let's move on to the technical side. All right, let's move on to the technical side. Now, the first technical side, which is important, is fail rally, lower low, lower high. All right, so bear market rally form, lower high and lower low. So that's where we're going. The market has to sort of trend down. So take a lesson to read price and yield volume chart. Now, some of you are not technical inclined. You tend to look at the fundamental, but trust me, knowing and reading the price and volume chart will help you a lot. It's like the language, what the market is trying to tell you. If you ever go to France, learn to speak a few French words. You get better services up there. I've been there before, okay? So a few words, that helps a lot. So learn to read a price and volume chart, okay? Next clue. Okay, now double-digit correction, second technical clues. Now, if you look here, these are the market decline of the period that we have. You can see during the recession time, 7 to 8, there were a 56% market down, okay, 56% market down. And for the KLCI, we did saw that market now. We are right now at minus 16% for the KLCI, right? We haven't hit although I know we are in 16% from the old high that we had. That is partly because of the current situation the Malaysians are in. But in the US context, we are down by 6%. And let me look back at the notes there. Okay, let me just share you where we were. I hope you all took a picture of this one here, and then you can see those clues. Just want to share with you. Oh, no, that's right. No, KLCI is about 16% from the old high. I have the Dow Jones on the next slide. Yes. So I'm going to go through each and one of them. There you go. Okay. Now, if you look at US from 2016 onwards, the worst case that they have was 2018, a minus 19%. Right now, it's a 9% plus last night 2%, you hit 11%, okay, which is around here. So that is what we call a double digit from the old high there. We are not there yet. Not there yet, all right. So let's look at the other final clue, okay, is the technical. Ugly looking charts. Ugly looking charts. So we want to see a full set sign of weakness. Now this is typically what we teach in TradeVSA. The full sign of weakness are typically bearish indicators. We see sell down, uptrust, no demand, and weekly bars. On the weekly bar, and it's on a downtrend decline stage 4. Right. So these are the signals that you want to see. Ugly looking charts. All right. So let's look at the Dow Jones in here. I always use US first, because if US were to go into full-blown recession, everyone's going to get it. So you can see, we do see a lot of strength coming in. We got the spring, we got the test. So I don't see the kind of weakness that you see. Do you see a sell-off yet? Maybe if you break the 2500, then we will see that. But right now, I'm just not seeing it. So that's why, to me, both the fundamental clues and the technical clues have to gel. If they don't gel, and that's what a lot of people are quite confused, they have to gel. When you have those two gel, then you have a full-blown recession. Then the next question is it a bad one? Is it a mild one? Or can we overcome it? All right. Next. So I do see there are more sign of strength than sign of weakness. Okay. Right now, if the market were to break, I want to see a little bit more weakness. That's why I'm not convinced that what we are seeing now, despite what Donald Trump tweeted last night, we are going into a 2008 global financial crisis. In the global